volume growth coming in. Margins were expected to contract about 60 basis points with a net profit growth of just around 8.3%. The release has hit the exchanges. We should, get the first number up for you, the bottom of your screen right up. Okay, there we have it, 2187. This compares with a poll of 2175 crores. No problems out there, especially on the bottom line. Trying to get some more details on the top line as well. We were expecting a 10% sort of growth coming by. Okay, the release has opened. We have a revenue of close to around 12,700 odd crores, 12,725 crores. That's mildly better than what the street was working with, but largely in line. 12,570 was the poll. The revenue that has come by is 12,724 odd crores. That's a positive. Just trying to find the underlying volume growth, but until then, we are looking at the management commentary out there. Okay.
Some details in the press release, Mangalam. Till the time you can actually go through more numbers out there. The company has given division as to what have they done in terms of segments. They have said that in home care grew 15%, driven by high double-digit growth in fabric wash. Household care continued to perform well and grew on a strong base. They also say that calibrated price increases were taken across fabric wash and household care portfolios to partly offset the high inflation in input costs. In beauty and personal care as well, they say that it was driven, it grew around 10%, driven by skin care, color cosmetics and hair care, and foods and refreshment grew at 7% against a strong prior year comparison. Tea grew on a very strong base and further strengthened its market leadership. Focus on market development and nutrition is yielding good results. They also speak about how a lot of their products are gaining momentum. They have also spoken about they're investing behind more brands, more portfolios and future fit capabilities. Any more details that you have?
Yeah, so we do have some management commentary out there. They have taken a price hike, of course, across the portfolio. They've said that there has been unprecedented levels of input cost inflation and subdued consumer sentiment. So, they aren't sounding extremely optimistic out here. EBITDA margins at 24.6%, bang in line with street expectations, slightly above on an absolute EBITDA front. What we still don't have is the volume growth. So the three numbers that we have on Hindustan Unilever this time around, 12,724 crores in terms of a top line, 3,134 crores in terms of in terms of an EBITDA, which means margins of close to 24.6%, which is a dip of 50 basis points from the same time last year, 3132 crores, and the net profit coming in absolutely in line. Street management sounding cautious on the input cost inflation. We have Shirish Pardesi of Centrum Broking joining us now. Shirish, your thoughts?
Yeah, I think the number came in line. Just much about the fact what you just mentioned is bang on the numbers. What we have also seen, the overall expectation which was in line in the beauty and personal care, while we were expecting a higher growth momentum into the nutritional portfolio. While we will wait for the management comment, how the merging of front can place. While I tend to believe that the discretionary has also taken a little more speed, could have taken a little more speed in the modern trade. So I think the result.
I'll give you some more details. Actually, the gross margins have increased quarter on quarter, and that could primarily be on account of the price hikes that the company's taken. Year on year, there has been a decline of 140 basis points. The gross margins coming in at 51.6%. This compares with 53% the same time last year, but the last quarter was 50.5%. So there has been some improvement in the premium portfolio. Among the segments, 15% growth in their home care. Just 10%. This at a time when the company has gone ahead and taken some price hikes in the soap portfolio as well. So maybe the volume growth is slightly below, what the street was working with in their personal care portfolio. Growth of just 10% when the street expectations were close to around 12 to 14% at least, given the price hikes were taken as well. And the majority of the street out here was working with a number upwards of 8 to 10 odd percent. So it's lower than even the lowest estimates on the street. 7% growth in their foods and refreshment business, 10% growth in the personal care business, and 15% in their home care business. The home care business has actually outperformed this time around. Prakash Diwan joins in now. Prakash, some problem with the input costs. All these things are now on the table. What are your thoughts?
So, Mangalam, I think one of the key areas to watch for companies like HUL is going to be, the inflationary impact of raw material costs. And if that is something which you can't keep on passing, this time around, probably they've got away with a slight improvement in gross margins. But when it comes to net margins, I don't think that's something which can be very favorable or promising going ahead. So these numbers very clearly tell you that the pricing ability to price products higher is only probably prevalent in the premium segments. And the rest of the segments, particularly food and all, there's a huge element of competitive intensity as well. Remember, the likes of Tata Consumer and all have actually... so my sense is these numbers will probably be almost like a pause of sorts. The stock would probably consolidate from here on, given these numbers, and not attract some mild signs, warning signs that probably are getting flashed.
Take that point. The company has managed to save some, money on advertising as well. Advertising as a percentage of sales is 9.5% as against 10% same time last year. Improvement out there. The 10% close to around 200 basis points saving last year. And over that, there is a 50 basis points saving as well. The stock is now flying. Maybe the street likes that there has been a quarter-on-quarter improvement in gross margins, and the results aren't a disappointment. They're largely in line with what the street was working with. Or it could also be that there has been some, there has been some mention of the underlying volume growth, which we can't watch in the press release yet. But, we're just trying to figure out. It's been an 11% growth in the domestic consumer business. Still do not